Hello and welcome back to another episode of the Market Outlook series. This is the 44th episode and we are here today to discuss the chart of Nifty, Bank Nifty and the Intersector Analysis. I will help you assess what Nifty has done over the last few weeks and what do we expect it to do next based on the price and volume activity observed. We will also talk about some very significant phenomena like the Fibonacci retracement ratios and extended triangle, and we will discuss from an objective point of view what should we expect from the market coming forward. After this session, I'm going to help you out with your stock queries. So if you have questions, just visit expinvest.in/stock request. The link will be dropped in the comments quickly for you to access. Make sure you fill up the form so that you can get your answers at the end of the session. Fastest finger first, so don't delay. Now I'm going to share my screen and let's get started with the 3-minute time frame of Nifty. So here's the 3-minute time frame of Nifty, and this is what we are seeing. Nifty in the very last leg of correction that we've seen recently has tested the level of 30, given a small breach and registered a tiny little positive divergence on the 3-minute. Now remember, a positive divergence on the 3-minute, which has occurred in the second half of yesterday, only has power for the next 1 or maximum 2 days, because 3-minute is a very small time frame with very little power. So what we see on the basis of the 3-minute time frame today, we did see some positive activity when the market opened, around 200 points positive, but nothing major. That luckily the low was at least respected, and volume participation, however, was not very active today. The support level of 22,000 was breached yesterday and also with today's opening, also during the day, but it has continued to sustain. Why is 22,000 an important level? Simply because of its psychological significance. Being a round number, it is an important support zone. Moving on to the 15-minute time frame. Now, what is interesting is that at 22,000 support, the 15-minute time frame has also given us a positive divergence. Now, another very interesting activity can be noticed on the volume activity, that when this downtrend started, we could see the volume picking up pretty significantly. As the price came down, we could see the volume increasing. But now in the second half of this correction that we have seen, the volume has not increased so much whenever the price has fallen down. Moreover, if you took a measurement of the very last rally that we saw, the 22,000 level coincides with the 78.6 Fibonacci retracement. This is not one of the most important ratios. I would say the 61.8% is very important. But what lends significance to this support of 78.6% is actually the answer lies in history. So let's just go back in time to the month of September and October and November. This time also we experienced a significant correction in Nifty. The total correction lasted around 7%. The first leg of the correction was 4%, and then we saw a throwback of around 2.5%, and then further correction of 5%. Why I have brought you here is because this time also, and there are a lot of other similarities between this particular period and the period that we are seeing unfold right now. Here also we saw that the uptrend which had ensued right before the correction, that was corrected by 78.6% before the price gave a move. Up to where did the price go? Back then it went as high as the 2%, or basically it rallied 2.5%, but of the same previous rally, it retraced up to the 38.2 retracement level, which coincided with some other key important resistance zones from the past. Coming back to the current activity, this is what I am expecting. The level of 22,500 is very important. And if you look at the previous rally that unfolded between the period of March 20 to 10 April, within that rally, the resistance of 22,500 played a very important role. So my expectation is that if this 22,000 level here continues to lend key support to the price, and if we do in fact see breakout above the level of 22,134, which would technically be a higher high on a wavelength, on a smaller wavelength, then we might be able to experience a retest of the level of 22,500. This belief or this observation also stems from the fact that pessimism has increased a lot in the market, especially in the very last leg of decline that we saw from 22,250 to 22,000. Right? Because over here also some expectation of respite was there, but all hopes got dashed when the market did not take any break from the correction whatsoever. Moving on to the 75-minute time frame. The 75-minute time frame is definitely suggesting a deeper correction because of the presence of the RSI negative divergence. And also, if you look at the RSI here, the RSI is yet to touch the level of 30. So even if there is a bounce back, I wouldn't expect the rally to continue a lot. However, I wouldn't bet a lot of money on that. If 22,000 does give away, then what next? Then in that scenario, 21,850 is going to be a very important support. Now, if you're already part of my Trade with Kavita channel on Telegram, again, I'm dropping the link in the comment for you to join. If you are already part of this channel, then my market commentary has been added. So the levels that I'm talking about, 21,850 being very important, is not news to you because you've already seen it on my Telegram channel. If you want my market commentary every day rather than just once a week, because on YouTube I only come live once a week, then you should join my Telegram channel, because over there I post my market comments every day after the market. Now, coming back to the analysis, if this 22,000 gets breached, 21,850 is very important for three reasons. Why 21,850 is very important is, number one, that is the 100% retracement of the very previous rally, so it is a psychologically important level. Two, second, the 100 EMA of the daily time frame is passing through this level. Third, there is a very important trend line. Now, why is this trend line important? Because this extended diagonal that we've been experiencing in Nifty, which started from 13th of December pretty much, this extended diagonal has seen multiple supports at this very same trend line. So if 21,850 comes, we can expect all of these three elements to lend strong support to the price and maybe give it an opportunity for some bounce back. Now, another very important observation, for which we'll go to the daily time frame, or rather let's just stay at the 75-minute time frame. If you can observe, this blue line is actually the 20 EMA of the daily time frame, which I have superimposed on this time frame. So I'm going to hide the drawings so you can see the EMA better. Now, what you can see is that when the momentum was very strong, right, the 20 EMA was acting as very good support. But ever since this extended diagonal has started in the form of the fifth wave, we've been seeing the 20 EMA get violated multiple times, to the point that we have now become desensitized to it. 20 EMA usually breaking in a strong rally is a warning sign, but the market has its ways of desensitizing us to warning signals so that we take it for granted and then ultimately lose capital. So there are lots of signals which are indicating towards a deeper correction in the market. But mind you, we are officially not in a bear trend yet at all, because to signify a downtrend, we need to see low, high, low. Whereas so far, despite of having lost the all-time high, we've not seen a single lower high on a significant wavelength. So I believe the 75 daily, so any time frame above the 75-minute time frame to be significant enough to give us a little definition of the primary wave of the primary trend. And the primary trend still suggests that we are bullish. So breach of 21,850 or the 100 EMA is actually going to be the first sign of a lower low and the first indication that we've entered the correction. So as long as that is not breached, we are officially still bullish. Another indication of weakness has also come in from the volume. The fact that the volume activity has been diminishing as the price moves up is also a telltale sign that we might not see a lot of upside immediately. In fact, the likelihood of a downside is more prevalent. Lastly, if you look at the daily time frame, the daily time frame's RSI has already gone into a negative range shift, which is also a warning sign that the momentum is definitely at a loss and some correction can be experienced in the market. With that, let's move to the chart of Bank Nifty. Now, on the chart of Bank Nifty, also what we can observe on the daily time frame is that there is a higher high on the price itself, but the higher high is missing on the RSI of the daily time frame, which means there is a RSI negative divergence. Again, because of this negative divergence, we can expect a deeper correction in the banking index, Bank Nifty as well. And my first support level is again this trend line that is present here around the level of 45,450 or 46,100. The 100 EMA has already been breached by Bank Nifty multiple times. It has a tendency to keep toying with the 100 EMA repeatedly. So that is my analysis for Bank Nifty. Now let's move on to indices. So this is my intersector chart, which helps me analyze how the sectors have performed on a relative basis. The primary indicator is the CNX 500 here. And if you look at the activity from, say, the opening of last Monday on a 15-minute horizon, we can see all sectors have pretty much suffered a lot this week. FMCG was down, was up 2%, which makes sense being defensive sector. That doesn't mean FMCG stocks have rallied a lot. They've just not fallen a lot this week. The CNX auto was closed behind with a 1.4%. But let me warn you, the CNX auto stocks are not looking so attractive to me. They might experience some correction, so you want to be careful in initiating fresh new positions in the auto sector. It looks like my internet had a little bit of a fluctuation, but it's back. The consumption and IT sector over here, I think new opportunities are trying to pop up, but we need to wait for some confirmations. Remember, I told you 2 weeks ago that I've liquidated all my portfolio and I'm sitting on 100% cash. That has actually played out really well for me. I was able to book nearly 5% profits in the month of April on my entire portfolio or asset under management, even though April was not a very positive month per se, full of volatility. But having actually liquidated my entire portfolio right at the beginning of this section has helped me protect a lot of my capital. Had I not liquidated my portfolio, I would have suffered a nearly 7 to 8% loss this month because I usually like to play in very high beta stocks. That being said, the PSU sector and the PSE sector and the energy sector, where a lot of bullish sentiment or momentum was witnessed, are the ones that have been beaten down the most this week. That being said, infra sector is where I would like to discuss this week. L&T specifically, I was studying the chart and I know a lot of retail traders have a tendency of going for stocks which have rallied in the past, thinking they will buy the dip. But remember, L&T has a tendency of rallying a lot for 2 years and then going into a year of correction. I believe L&T also indicated by the negative divergence of the daily time frame might not rally as much in the coming year. So you want to be careful if you are adding L&T or if you're planning to add L&T fresh into your portfolio. So with that, let's move on to your stock queries. And if you've not filled this form already, I would request you to please go ahead and fill it up. I've helped nearly 150 people through this form by answering their queries, and you could be one of the lucky 10 today. What matters is that you fill up the form quickly, and I'm going to get started with answering your questions. So let's hide this so you can see my screen, and let's start taking your queries. Also remember that if you are new here and if you want to see my past videos, you can hop over to my YouTube channel. Just search Kavita Agrawal CMT CFA and you'll be able to find my YouTube channel where all my past live videos have been edited and uploaded in a faster, in a cleaner and a meatier format so that your time is used in a more effective manner. So don't forget to subscribe to my YouTube channel, please. Which also reminds me that if you are here, if you're watching this live, and if you like what I'm sharing, please do give a thumbs up to this live stream. It means a lot for our morale. So the first question is from Mukesh. He's asking about Mazgon Doc. Average cost is 2150. What is the next target, he asks? So this is predominantly very bullish as a stock usually, but here's what I am seeing: a massive negative divergence on the daily time frame, which is a little concerning. But the stock has again already given a little correction, taken support at 40, gone up, and is testing the high. Or this is again concerning that the weekly time frame is also showing a negative divergence. So it will be very interesting to see whether the stock moves above this high price of 25. But the volume activity here is suggesting that the stock does have a lot of steam. So for you, I would suggest please maintain a stop loss in the stock at the level of 2036 and continue to hold. Once the stock crosses above 25.25, you should check back in for a revised stop loss. But until then, take it with a pinch of salt, because here there are some indications of a potential correction. But think that Mazgon Doc is a pretty good stock. It might be possible that the correction indicated might just have been over with this sideways consolidation, which has been going on for nearly 7 to 8 months now, and the stock might be ready for the next leg of rally. So it's very hard to tell. The 200 EMA has already been tested on the daily time frame and already gone up. So a good strategy here would be definitely what you've already done: create a position, set your stop loss, and then wait. If you want to hold the stock for the long term, so this was my advice, assuming you want to hold the stock for short term. But if you want to hold it for long term, then maintain a larger stop loss below this consolidation zone at the level of 1700, and then hold for a much larger target of around 5090. That is personally what I'm doing in my client's portfolio right now. Akanksha is asking about a stock that I have never heard of before, Bajel Projects. Let's see. Let's get to know the stock a little bit here. This is a utility stock, alternative power generation. Market cap seems to be extremely not there. I don't know. Is this a BSE? It's an NSE stock. Why is the market cap not mentioned? The stock does not pay dividends. Honestly, technically, it's really hard to analyze because we don't have a lot of market data, and I'm not aware of the fundamentals of the stock. So I am not. So I am going to give you an analysis on the basis of a 15-minute time frame, which, let me warn you, may not be the best approach for this stock. It definitely requires some fundamental analysis because it's illiquid. It's clearly a pretty small company. However, from a very short-term perspective, a small positive divergence is visible on the stock. So from a short-term, I personally wouldn't touch a stock like this that I don't know. But if you're more aware of the stock, then I would suggest using a stop loss not smaller than 229, which on a percentage basis is nearly 11%, again out of my comfort zone. And your target, because the underlying trend looks pretty bullish, I would expect a minimum 12% target, which again means very unattractive because risk reward ratio is just 1 in this stock space. Moving on to the next stock, Geo Finance. For Sudhanshu Singh, average cost 383, bought a little bit almost at the top. So Sudhanshu, since you've expressed eagerness to learn about the stock market, I would request you to please connect with me or my team. I would send you the link to booking our Understanding the Service offers in the message, in the WhatsApp message. Talking about that, if any of you also wants to connect with me or my team, just hop over to my Telegram channel. And if you go to the Telegram channel over here, you should be able to see, there you go. Let me just forward this again. You'll be able to see this book a call button, which basically is a consultation. We charge a nominal fee because a lot of people have a tendency of booking time and then not showing up, which we don't appreciate a lot. So we'll just help you out with understanding how my services or workflow is in the market. So here what I can see is Geo Finance, beautiful rally, almost 78% in a very short period of time. And the daily time frames suggests that the volume has been increasing as the price goes up, which is encouraging. We are experiencing a little bit of a correction because of loss in momentum, and I believe because of the overall market downtrend. The 100 EMA should act as important support. Also, there is this low here. Honestly, if you'd asked me sooner, I would have asked you to use a stop loss at the level of 350. But since we are a little bit beyond that and you are clearly still holding the stock, for now, I would suggest that when a small bounce up comes in the market around 366, try to exit the stock for now. And I'm expecting the stock to fall down a little bit further till maybe 320. That is where you should consider re-entering the stock. So exit around 365, 366 for now and re-enter around 320. So for Harshit Upat, let's take a look at Ugar Sugar Works, new stock from me, entirely new stock. So let's see how much data do we really have here. A lot of data to work with. So we're going to reset. This is the 5-week chart. It just helps me get an assessment of the very, very broad trend. And I can see, so I'm going to draw some trend lines on this because as any sugar stock, this is highly super cyclic. And let's see, this looks like a very good intermittent trend line. This looks like another very good one. And this is the last one that we are at least going to draw on the weekly time frame. I see this trend line has lent some support, and I don't really see this low getting breached because the RSI here has already consolidated around 30 and is showing a positive divergence and it's on high. So what I would suggest, even the 75-minute time frame is showing positivity, a small negative divergence in correction. I think the stock is a very good juncture to make a fresh entry right here at 74. And this also gives you a very attractive risk-reward ratio because the stop loss that you need to maintain is the previous low around 63 rupees. And the target that you should observe here should be around the level of 144, basically this trend line. Given the usual trend of the stock, I would expect it to exceed 140 rupees. So if you do go ahead and make a position here, as when the stock goes above 85 rupees, please do check back in. I will make sure that my team sends you the link of this stock request form as well in the message that you will receive on your WhatsApp because you fill the form. So Harshad, that's my suggestion on Sugar for you. We have repeat stock. So Sai Karthik is also asked Finance. His cost price is 306, a little bit better. So the same analysis applies to you also, Sai Karthik. So my team will share the same message with you. Matthew is asking for RVNL. So he's bought around 120 and wants to know whether he should sell or continue to hold. A lot of people got stuck in RVNL when the railway stocks became like a super buzzy thing, and it's unfortunate. I always say people don't buy stocks at the top. Don't buy stocks after the rally. Wait for correction, wait for depth, but human nature, right? So see, the underlying trend in RVNL is definitely super duper bullish, but what you also need to understand is that the stock has already run away quite a bit. The volume activity does suggest continued correction, but that at the same time, the stock has a tendency to bring massive rallies and then long consolidations time and again. So I think post-election is when I would expect some continuation of the bullish trend here. And from a long-term perspective, it is a good stock to accumulate for sure, no doubts about that, because the government is doing a lot for the real sectors. And the volume activity does suggest great participation every time the price kind of rallies and then withdrawal of the selling pressure when price starts to decline, which means a lot of delivery-based holdings in the stock, which is great. Here, the stock has formed a base around the level of 225 to 210 to 225. So that is where you should consider exiting a long-term holding. This stock is not very suitable for the short term because, like I said, for the short term, it doesn't really respond great in a great manner to short-term analysis. The price is too volatile for it's too noisy. So only if you're investing for the long term, then you should opt for RVNL, not a very good candidate for short term. If you want to participate in the stock for long term, it is at a good point to start accumulating. The next 10-11% down from here, from price of 260 to 235, it's a good idea to accumulate. Matthew, if you're holding RVNL from a perspective of long term, which you clearly are because buying price is 129, my suggestion to you is please continue to hold RVNL for long term and maintain your stop loss somewhere around the level of 200. 210 is the support that I gave, so 205 should be your stop loss. So for Ayush, now let's take a look at Aster DM. I like this stock, very interesting. So we actually had an active recommendation in this stock and we exited. My target was exactly hit at 555 and all my clients were able to book profits in this. A lot of people wanted to continue to hold because they said the stock is going to give dividends, massive dividends. What happens when dividends come? The price gaps down massively. And that is exactly what happened in Aster DM on the day that it gave dividends. A lot of people, I think, don't understand that price adjusts downward for the amount of dividend that you are receiving. So you're essentially not really gaining a lot of money. And naturally, when that massive price adjustment happens, a lot of people end up selling also because their so-called aspirations of making money off the dividend policy do not really play out so well. That being said, what I can now see is that Aster DM has started to show a massive positive divergence on both the 75 and the 15-minute time frame. The daily time frame is super bullish. The uptrend experienced massive participation and the downtrend was dry volumes, basically shaking out the weak hands. And now I think Aster DM is also taking support at this key trend line and it does look very attractive for a potential re-entry. So Ayush, good stock inquiry. You just purchased prior to X dividend date. The max I can hold for 1 month. Please suggest your analysis. Should I book the stop loss at current level? I had purchased 92 stocks. Oh, Ayush, 409. I am so sorry that happened to you, but I would suggest you continue to hold. But of course, you should always buy stocks with stop loss. And on this stock, your stop loss currently should be around the level of 318 rupees. Tanuj Rai is asking for analysis of team. Long time since I studied this. So 64.65. God, why did you buy it right at the top? And it's down 35%. Guys, I will again emphasize, do not buy stocks after the rally. Always use stop loss. Risk management is the most important thing you can do in the market. It's more important than buying stocks. See, on the weekly time frame, what I can see is that this correction is happening against pretty strong volumes, which means people are selling with intent of not buying again. I don't think this stock is going to recover for a very long time, and TV18 historically is a super cyclical stock. It has a tendency of giving massive rallies followed by massive corrections. So unfortunately, you've bought the stock right at the top, and if you don't sell here, you can experience another 20-30% correction. I am personally waiting the stock to fall down to 25 rupees to make an entry. Before that, I won't be buying the stock. I strongly suggest book your loss, rip the band-aid off, let the wound heal, learn from your mistakes, move on, do better next time. Albert William is asking for analysis of LTM. Triggered my stop loss today. It is a good stock, and I can see the daily time frame has touched the level of 30, but is that a good thing or is that a neutral thing? Let's see. Right now, the price is around at a 78.5. With that, we come to the end of today's live session. Thank you so much for joining me, and I will see you again on next Wednesday in my Let's Get Technical series, where I bring to you a topic related to technical analysis, and we pick up a few charts and we absolutely dissect and postmortem it. Usually, they are associated with my past trades